Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como and today is July the 2nd. My kids informed me today that we're actually closer to the year 2050 now than we are to the year 2000, and that makes me feel extremely old. So, anybody who else sharing my pain, let me know. Before we get started today, I do want to talk a little bit about this platform of YouTube. Some interesting things I noticed when looking at the analytics, which they share with you. I'm kind of new to this whole thing, but 68% of those who are watching this video are not subscribed yet. So I'm going to ask you a little favor here. I'm going to ask you to hit that subscribe button for me. Follow our stuff. If you like watching it, give us a follow. And even if you like this video, give it a little thumbs up. It helps to get this channel kind of moving forward. We're still very new here, just a couple of months in, and we have seen some really good growth and things like that. This YouTube channel is free. We'd like it to remain free. And any subscriptions or subscribers that we have on this channel and the likes and comments and things like that really help to get us up there and to promote our what we are doing here for free. All right, let's get into what is happening in the markets today. We saw a really good day in a lot of markets today. Canola was up $24.80 into the close, settled at $734.50. Minneapolis wheat up 20 and a half cents as well, settled 667 and a quarter. Kansas wheat up 11 at 542 and a quarter. Chicago wheat up 15 at 564. Soybeans up 20 and 3/4 cents at 1048 even. Soybean oil was up $1.39 or 1.39 cents. Sorry, that's per pound. 55.07 is where that settled out. Corn up 9 1/4 cents at 429 and a quarter. The Canadian dollar was up a little bit at 73.55. That's up to 27 basis points. Live cattle up $1.12 a hundredweight at 212.45. Feeder cattle up $3 a hundredweight at 309.25. All right, before we get into some of the charting and things like that, just wanted to kind of highlight a little bit of a news item here. We did see the closing of the Viterra and Bungee merger today. This was announced today by Glencore. This is a snippet from the Glencore website. So if you want to read more about that, I would urge you to go to the Glencore website or Google the Bungee Viterra merger. It did finally close. I think that will mean some changes here in the Canadian prairies. I think they will be overall positive changes. I think Viterra brings a good breadth of the grain logistics and export business, and Bunge more of the crush business. So I think there will be a better balance there with the two entities. Moving forward. So I look at this as an overall positive. I know a lot of folks look at it as, a consolidation of competition, and that's not necessarily always a good thing. But I don't think that Bunge and Viterra were competing with each other in too many spaces. And so I think that this will just make that or those two organizations stronger. And I think there will be a net benefit to Canadian farmers as a result. All right, let's get into some of the charts here. This is what the November charts look like today. I think there was, November or canola in general outperformed much of the rest of the ag complex today. I think that has a lot to do with just some optimism in the trade, in the Trump trade war and all that kind of stuff. There's some good things coming out of that as far as a progression forward. There was some shots fired last week after the digital tax was kind of brought to light, and it was going to take effect, but that no longer is the case. And as a result, I think trade negotiations or discussions are moving forward, and that's one of the reasons why we are seeing canola outperform here. From a chart perspective, here I'll turn on my little highlighter laser pointer, I guess it's called here. From a charting perspective, good things, I think, overall. We probably have to redraw our trend line here to kind of encompass this this low here. From a technical standpoint, this still looks like a bull market. I'm very cautious to say that. I'll show a couple of charts here, particularly a seasonal one, as we move forward. But we saw some rallies, pullbacks, and they kind of continued to make new highs and higher lows and things like that. This last low that we've seen now is a higher low from the last one. It did come down and it did break the 20-day moving average. It did break the trend line. Those were both concerning things. It did hang on above the 50-day moving average. We've seen 2 strong days as a result. So that may mean that we might move back up to test the 750 mark. That would be really great. I think there were a lot of farmers who feel that they missed the opportunity to sell up there. There's big carries in this market as well. So if you are looking for an even higher price and not be locked into the November or October or November delivery period, you can push it out, January, March, all the way out to July has some carries in it right now that can get you some extra value and pay you for storage as well. Just to kind of illustrate what that day looked like today, this candle here was where the market opened at last night. So the markets did open in the overnights last night. We did see a shot in the arm in the canola market that did pull it up, kind of traded sideways through much of the day and then climbed into the latter part of the day. Didn't close at its highs, but pretty darn close. Was a really good day for canola. Now, I promised to talk to you a little bit about the seasonal pattern here. Now, we are, and I'm going to change here to the pen. We're about, here right now in this is really great drawing. Right about here now in the seasonal chart. So as you can see, as we move through spring, it does tend to move lower and then rebound. Generally, those rebounds don't get back to the previous highs. So that is a bit of a watch out. And then it tends to move lower as we move into the end of August and into the beginning of September when harvest is happening. So just something to be aware of because, being completely outright bullish this market, it may get higher than the previous highs. It may take into the new crop in order, like into the next year, into 2026, in order to do that, because we do kind of see it kind of move lower. This is particularly true when there isn't a major weather issue in Canada. And I think the weather has gotten a little bit better over the last couple of weeks. And again, we'll talk about that in a little bit here when we look at our weather charts or our weather maps for today. Some other oilseed news. Here's December soybean oil. We saw a move higher there. As we mentioned earlier, it's kind of trying to retrace itself back to those previous highs as well. Up here, around the 55 cents or 56 cents, in between 56 and 57. Soybeans also had a good day today. Crop condition ratings did not rise as much as as the other, row crop, as corn did in the last report. We'll get into that. So maybe there's some bullishness coming out of there. Just general market sentiment today was more positive. Some of that may be coming from crude oil. We did see some pretty big gains on crude oil. The August contract was up over 3%. That's about, well, it's a little bit less than what canola was up, but the energy market was being bolstered today as well. And so all those kind of things, that's kind of the summary of the oilseed complex. I didn't put soybean meal in here, and actually we saw gains in soybean meal as well. So both products, soybean oil and soybean meal, saw gains. That helped to pull soybeans up, and we may have seen some of those gains come at the courtesy of the crude oil market, particularly in the vegetable oil space. So good day overall. Including wheat, actually. And we'll get into wheat here. This is September Minneapolis wheat. And just going to look at my bigger screen here. We did move up towards the, above 650 at one point today. We settled just below that, but just really good gains that we've seen over the last couple of weeks. We may be kind of putting in another low here, and we can start drawing a trend line here. I did put a Fibonacci retracement on here as well. We did get down to the 61.8, tested that before rallying back. We're now back around the 23.6. So if this market is going to continue to look bullish, we may see another test of the 665 area if that's the way it's going to go. I think there is some headwinds to be had here in this wheat market, though. This is Chicago wheat, and I just put a Chicago chart up here. Kansas looks very, very similar. We did see a rebound a couple of days. Last couple of days have been good to wheat. Harvest is behind schedule in a lot of the wheat growing areas, or as a whole. Across the country. So that may be putting a bit of a bullish spin on it. There is some heat coming as well, which may be trading into this market as well. All right, let's look at weather, particularly Canadian weather. Here is the past 30 days of accumulated precipitation. I think this is important as we look um, into the future here. We have seen a significant amount of precipitation through kind of the central Alberta and some of central Saskatchewan as well. These are all above normal amounts of precipitation for a 30-day period. We're starting to get into normal as we move a little bit farther south and into Regina. There's still some dry areas in the southwest portion of Saskatchewan. And, this area that's kind of east of Edmonton is also kind of suffering. It's been a bit of a dry patch here as well. But they did see some much needed rains over the last couple of days as well. Here's the past 30 days. This is again average percent of average precipitation. So you can kind of see that we've seen a lot of normalcy or normalcy. Did I say normalcy? Kind of move into a lot of these areas of Alberta and Saskatchewan. Again, bringing some much needed rain to a lot of areas and alleviating some of the drought concerns up there. Was quite dry as a percentage of average through much of southern Saskatchewan and most of Manitoba as well, although we have gotten some pretty good shots of rain here in Winnipeg as in the last few days. Here is the past 7 days of precipitation as well. So again, concentrated right around Saskatoon. One of our partners was actually spending the weekend in Saskatoon, and she did see a significant amount of rain there, almost as so much that they had to stop driving during the downpour. So lots of precipitation in a very short period of time, above average there as well. Looking forward, it does tend to look a little bit drier, and particularly in that central area of Saskatchewan and that eastern area of Alberta. So that may be adding a little bit of extra oomph to the canola markets as well, and even the spring wheat market today, as that's some key areas for those crops as well. Looking at temperatures, this is the 1 to 7 day. As you can see, it's a little bit above average, 2 to 4 degrees above average. But tomorrow, the 3rd of July, is going to be the hottest one. That's where we see some really hot temperatures. 90 and between 90 and 100 degrees Fahrenheit, which is a little bit above seasonal norms, or pretty hot, particularly if the canola crops are flowering and different staging and things like that. So overall, it's a little bit hotter than normal for the Canadian prairies over the next little while. Tomorrow, I think, is the hottest of those. So it's not like it's a sustained heat over a long period of time. All right, looking at crop condition ratings, this is Alberta's crop report. This was issued on Friday. So, some of the information we're putting through here today is a little bit delayed because of the Canada long weekend. But this is Friday's Alberta crop ratings. As you can see, major crops as of June 24th is 59%. The 5-year average is 72. So we are below average on crop condition ratings. You can kind of see that there is some lower ones in the Northeast and particularly in the Peace region as well, where they have had a lot of dry areas as well. So Alberta is a bit of a watch here, and I'll just kind of showcase where some of these areas are right here. So here's that Northeast area that is relatively dry, and the Peace area is dry as well. We are seeing better conditions than normal in the kind of that central area and the south area, save for, the eastern part of the province where Medicine Hat and east of Lethbridge there. So still some dry areas in Alberta. It still is below average as far as crop ratings go. So that's probably some of the areas that are a bit of a watch out. Here's kind of some subsoil and subsurface moisture comparisons. It is getting better. I guess that's one way to look at it in most areas, I should say. Surface moisture did get worse in the Peace region. It's got significantly better in the rest of the regions. Subsurface moisture also got worse in the Peace area. Maintained it in the north central area, and has gotten a little bit better in the the south central and the northeast area of Alberta. So not it's not the same thing across the whole province, and we're seeing that in a lot of areas where you can't say that the Western Canadian prairies are all in one type of pattern or not. It's very spotty and it changes definitely depending on region. We haven't seen these crop condition ratings come out yet for Saskatchewan, but when we do see that, we'll be updating you on that as well. Speaking of crop condition ratings, here is the U.S. Crop condition ratings. They, again, were released on Monday, but we haven't talked about them yet. So I know most commentators probably have gone through this already, but we're just going to do it our way. So here is corn crop condition ratings. We saw a 3-point jump here week over week from 70% good to excellent to 73% good to excellent. Now, you could definitely see this reflected in the futures markets as the futures yesterday pulled down to $4 a bushel. We could still see a 3 in front of this number. I mean, we're talking about a large amount of acres at 70 or 95 plus, million acres. We're seeing good crop condition ratings. I've seen yield estimates been thrown around at 184, 185, and even 190. I heard a commentator talk about today. Those are big corn yields. I don't necessarily know if I would hang my hat on those corn yields. There are a lot, because of the acreage increase, there are a lot of areas that put corn acres in that didn't normally see them. That'll pull the average yield down a little bit. But the market is trading it with a little bit more of a bias towards a big crop, as you can tell by the recent low that was put in yesterday. Moving on, spring wheat crop condition ratings actually fell by 1 percentage point last week or this week from last week. However, what we are seeing is some gains in the like fair category, which is, up from the poor to very poor into the fair category. So it could be argued that the crop is in better condition overall than it was last week, but it did see a percentage point drop down from good to excellent into fair, and we saw a couple of percentage points move up from poor or very poor into fair. So I don't know. The crop may be about maybe the same. It's just that some areas got worse and some areas got better. So moving on to U.S. soybeans. This one stayed pretty static at 66%, I believe it is. I didn't put the number on here, but it stayed the same as last week. So again, not a lot of change week over week. The futures, again, we did see a rise, but they're still kind of within, a zone of trade at this point in time. So nothing to get excited about yet on U.S. soybean crop condition ratings. They are still above average for this time of year. All right. Thank you for tuning in. We hope that you hit that subscribe button and that you tune in again tomorrow. Have a great day. We'll see you again tomorrow.